I'm gonna make a quick video explaining fair value gaps and inversion fair value gaps and how to use these strategies to make money in the market here. First, you'll have a bullish FEG, which is created by aggressive buying in the area where there's a gap in between 3 candles here. And sometimes price will pull back into the gap. Sometimes it'll fill it in, sometimes they'll tap it and then bounce right off of it. I would use these gaps with other confluences here, and trade it with other confluences to get the best result, and not just use the gaps itself to obtain like a result or trade in a certain direction. A inverse FEG is when price breaks through that gap and inverses into to the opposite side, right? So with a bullish FEG, this red candle closed and broke below this gap here. Now it becomes a bearish inversion, and then with bearish inversion, sometimes the price will go back, respect that bearish inversion, and then go back down in the other direction. So you see price tap this zone right here and then continue downwards. So same thing, even with this green candle, tapped and then continue downwards. And then you also have creation of other gaps here as well. Sometimes is respected and sometimes not, whether if it's a FEG or inverse FEG. Right here you have a bearish FEG, where this green candle broke through it. So once that candle closes above it, it becomes a bullish inversion, right? So price can come back, tap it, and then go up from there. Let's see what happens. So once it went up here, breaks through this bearish inversion. Once it does that, breaking through means that the candle body closes outside of that. So once that happens, I'll usually delete it. And then at the bottom here, it looks like you have a bullish FEG that's been created here. All right, so let's click the play button. All right, so bullish FEG and bullish inversion down here with a bearish FEG up here. So I'm just gonna draw this out. Pay attention to where the candle bodies close. All right, so if it's the candle bodies close within the gap, and the gap is holding it, then that zone is still respected. So you see this red candle right here, this candle body closed below this bullish inversion along with this bullish FEG. So if it closed below the bullish inversion, you delete that. If it closes below this bullish FEG, right, then this becomes it just flips, so it becomes a bearish inversion, for which price can come back up and then trade in this direction there. So let's see here. All right, this green candle tapped this bearish inversion and then went straight down, and you have a bearish FEG right here. The easy thing to remember is if you have a bearish FEG and price breaks through, it becomes a bullish inversion. If you have a bullish FEG and price breaks through, it becomes a bearish inversion. And when it breaks through, pay attention to where the candle body closes. So it has to close outside of it. All right, so this one didn't close outside, it's still respected. Okay, same thing with this bearish FEG right here, still being respected. Right, so notice how this green candle body closed outside of this bearish FEG. So once it does that, it becomes a bullish inversion, right? So this red candle looks like, even though it wicked outside of it, so bullish inversion meaning that when price goes back into this bullish inversion, it wants to become, or it wants to go bullish, right? Price wants to be bullish, it wants to go up, right? Notice how the candle body is still above this bottom portion of that gap right here. So this bottom portion. So this bullish inversion is still being respected. And then now it's trading in between a bullish inversion and then a bearish FEG. Now let's see what happens. We click, you see how price is still being held until this breaks through. If a bullish inversion breaks through candle body, this candle body closes below this bullish inversion, then you just delete this zone. So it's just a matter of what's being created, what is being inversed, and what is being respected or broken through. Now this green candle body closes or closed within this zone. It did not close outside, so it's still a bearish FEG. Even this next candle here, let's see what happens next. Okay, so it's still being respected. This is a bullish FEG here, where this red candle closed below it, and since it closed below it, it becomes a bearish inversion. And with that, you're looking for price to go up, respect that bearish inversion, and then come back down. So let's see what happens here. This green candle tapped into the bearish inversion and it broke through. All right, so it broke through, this candle body closed through the bearish inversion, so you delete that. And then it also, the candle body closed outside of this bearish FEG, so this becomes a bullish inversion. And so you're looking for price to pull back into the bullish inversion and then go up, or tap into this bearish version again and go down. So you're stuck in between these two inversion zones here, right? So it looks like this bullish inversion is holding up, same with this bearish inversion. And notice how this candle body closed below this or outside this bullish inversion zone. So this zone is disrespected, and so you delete that. And you just keep on going. Price is going to make these gaps here, bullish and bearish gaps, and then depending on where the candle body closes, it can become a bearish or bullish inversion. All right, and then if price breaks out into the opposite direction of that inversion, then you just delete that zone just because it's not being respected anymore. This is not a gap here. I'm just going to delete this. So here, here's a bullish FEG. This price is still respecting this gap here, right? And then so also this is a bearish FEG, which price, look at the candle body, is closing within or below the zone here. So bearish FEG. Let's see what happens. Okay, now price broke through this bearish FEG, still respecting this bullish gap. And so when price, this green candle body closes outside of it, it becomes a bullish inversion. And you see price tap back into this bullish inversion with this red candle. And then went back up to this bearish FEG right here. So bearish FEG. Let's see what happened next. So candle bodies closed below or inside of it, so it's still a bearish FEG. It's not going to inverse until the next candle closes above it or closes outside of that above. All right, this red candle closed below this bearish bullish inversion, so you just delete that. All right. So that's how I draw my FEGs and my bullish and bearish inversions. I find it to be more accurate on the 1 minute versus the 5 minute, but you can test it on all time frames. And then also I combine this with my EMA, SMA indicators. So like I said, you can use this strat here. Make sure you combine it with other confluences for the best results.